Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the gold on its lows. Actually, at this time, we're just above, just really at 2000. I think it's 2003. Currently, at this time, we'll just go and take a quick look at that. You can see here since Friday, it's just been at the 2060. It's just been a straight move all the way down here, and you can see here 2003.60. And potentially on the way down here to 1986, potentially. This would see some good support here. But all the way down here to basically $2,000. And taking a look at the euro took another little bit of a dip. I think we've come in, at least as far as the spot. We've had 17.17 since yesterday, and actually I think we kept that as our same bias chart for today, and I think we've probably come pretty close there. Yeah, actually the low's been 17.21. We're actually at 17.46, so we actually come off a bit off these lows in the euro. And that's on the spot. We're looking here at the 6E, and that's on the futures. And taking a look with cable. Cable's been trading in a tight range, and actually most of the majors traded in a tight range yesterday. And cable was one that was very, very tight. And actually, we're seeing the same thing today. The low so far has been 30.55, and the high is 30.96. So we're just trading in a 40 pip trading range. So it looks like, I think I mentioned in one of the comments, it looks like we're in the dog days of summer when it comes to FX. It's just very, very, very quiet. Taking a look at what we are in the NASDAQ, we'll continue to press up a little bit higher. We did make it up to, you can see here, up to this 11,137. Made up there before backing off a bit. But here we are starting to reassert ourselves. So we saw that dip yesterday, and we're kind of making a push again. Take a look at this. And a nice little pop back here. Be interesting to see how much further we can go on and move on this. Just take a quick fib on here. So 11.148 would be the 61% of this move. And then just the high there would be 11.155. So we'll see if how much further they can push. We'll take a look. A little bit closer, a little bit later on there on that. S&P is still relatively strong themselves. And let's go and take a look at the news for economic data. Coming today, at the bottom of the hour, we'll have UK claimant count with unemployment rate. And actually, we did show on here. It's a bit odd. Showing that they already have the data, although I was going to say at the bottom of the hour, which we haven't reached the bottom of the hour, but it's already shown here that the data already came out. And at the top of this next hour, we will have zoo numbers Zoo economic sentiment, which is expected. Reuters poll is going to be 58, and current conditions negative 68.8. As we move into the states, we'll have an NFIB business optimism index. That would be at 6 a.m. Eastern, along with at 7, or should I say 8:15 Eastern is going to be Canadian housing starts, along with PPI final demand. That'll be final 8:30 Eastern. So that'll be the big number for the day here in the States. It's going to be PPI, but it'll be final demand. And then Canadian housing starts. We do have German zoo numbers. Those will be at the top of the hour. As I mentioned, it's been a relatively quiet session when you look at how has been. And we've actually been trading fairly quiet. I was looking at this actually in Asia at the time, and I think I don't remember, it must have been right here. No, it was actually earlier than that. I think it was right here. Yep, yeah, there it was. And when I looked on here, I'm like, oh, wow, there was a little bit of a pop here and a little bit of decent volume. Then I looked and the volume was like 150. I'm like, oh, my God. We did take a dip there, and then we reassured ourselves before coming up to this 11,137 that we're referencing. And then we took a decent little dip down here. I wasn't up at that time, but that was a decent little pullback. Just going and take a look at FX stories. And like I said, it's relatively quiet. As I said, we're into the dog days of summer. So Australia, New Zealand dollars settle back. Data underwhelms. Australian New Zealand dollars were cooling their heels on Tuesday as the deadlock on U.S. fiscal stimulus restrained risk assets, while data underlined the economic damage being done by the new lockdown in Victoria State. The Aussie stood at 71.70 after a pullback from the recent 18-month peak at 72.42 and found support at 71.40. More support comes in at 70.70. The Kiwi dollar was holding at 66.10, just above important support of 65.75 and a shot of the recent top of 67.16. Both currencies have edged back as the US dollar benefited from the squeeze on crowded short positions after a week of losses. The Aussie also had domestic troubles as a fresh coronavirus lockdown in Melbourne, capital of Victoria, that hurt businesses and consumer sentiment. The NAB business survey out Tuesday showed confidence took a turn for the worse in July, even as conditions improved outside of Victoria. The weekly survey of consumer confidence in the ANZ showed his sentiment had slipped to a 7 straight week, while spending on the ANZ cards weakened in Victoria. Figures on weekly payroll showed job gains had stalled late in July, something that will not fully be reflected in the official jobs report on Thursday. The July labor force figures will receive plenty of coverage, but our advice is to see the report for what it is, a dated read on the labor market that has not picked up any job losses associated with the second lockdown in Victoria. New Zealand, in contrast, has gone weeks without a new coronavirus case, and the economy has improved markedly. This has lessened pressure on the Reserve Bank of New Zealand and to cut rates further as the policy meeting on Wednesday. Analysts do suspect the bank might announce an increase to the bond buying program and extend its in-buy date. The question on the minds of currency market participants is, will the RBNZ attempt to make a play at lowering the New Zealand dollar, said Hamish Wilkinson, a senior dealer at Kiwi Bank. This could be observed either to continue job bunning or even contribute or confirmation the RBNZ will expand unconventional policy toolkit to include foreign asset purchases, he added. Depending on what the RBNZ delivers, the New Zealand dollar should see a good chance of a breakout of a current 66 to 67.50 range. I was just looking at it. Look at it. We just broke. So we just broke 2,000, and we talked about that area coming in at 19. I think it was 1986. And the dollar holds its ground as investors await U.S. stimulus talk. The dollar held overnight gains as Tuesday following 7 weeks of an almost relentless fall as investors clung to the hopes of a bipartisan stimulus deal in Washington and U.S. bond yields rebounded from multi-month lows. The dollar index jumped back to 93.56 from Friday's low of 92.49. Having fallen for 7 straight weeks, the currency was due for a short corrective bounce. The euro changed hands at 17.45, up slightly on the day, having eased 0.5% in previous trade. The dollar stood little changed at 106.07 yen, and the dollar's decline appeared to have come to a halt now. Although talks on the fiscal spending are locked in a stalemate, we're at least avoiding a complete cutoff of extra jobless benefits, said Minoru Ichida. Trump on Saturday signed executive orders restoring part of the enhanced unemployment payments and suspending payroll taxes. Compared to the market consensus of a stimulus deal worth $1 trillion to $1.5 trillion, economic boost from the announcement could be clearly smaller. This is really not true. I was looking a little bit more in depth into this, and the unemployment benefits they're talking about, they're using part of the budget. I'm trying to remember what it was for. But anyway, that being said, it's not even set up. So there's been talks. I saw where they had even spoken to Kudlow. He said it could be weeks before they come up with it. Also, the press secretary, McNerney, she said she couldn't pinpoint a date when they would actually come. As far as the unemployment benefits, part of the deal is that they say that the states would be responsible for 25% of that. Many of the states are balking, saying that they wouldn't even be able to go on and afford that. So there are no unemployment payments at this point. Even though the story says that, there are none. You know what I mean? So, and technically what he's doing is unconstitutional. So there's been a fight there. But the point being is those benefits I was watching is they're not even sure when they'll even come at this point. And even when, like I said, when they pressed Kudlow on Sunday morning, he said it could be weeks. And Press Secretary McNerney said that she couldn't give a specific date when those funds would be available. So it's not like as if, oh yeah, the spigot gets turned on. That hasn't. So U.S. congressional leader and Trump administrative officials said on Monday they are ready to resume negotiations on the coronavirus aid deal, although it was unclear whether Democrats and Republicans will be able to bridge their differences. On Monday, the S&P rose to a 5-month high, while the yield in 10-year treasuries rose to as high as 0.581%. Investors are also keeping an eye on the rapidly deteriorating relationship between Washington and Beijing. China opposed sanctions on 11 U.S. citizens, including Republican lawmakers, following Washington's sanction on Hong Kong and Chinese officials. Treasury Secretary Mnuchin said companies from China and other countries that do not comply with the accounting standards will be delisted from the U.S. stock exchanges at the end of 2021. While the market has shown limited response to the latest salvos, analysts say the competition would have longer-term implications. What used to be a dispute over the trade has now evolved into something about ideology, said Daisuke Uno, a strategist with Mitsui. On the whole, the U.S.-China tensions could lead to a dollar selling, but the negative impact will not be limited to the U.S. stagnant trade, but what could hurt the global economy. Also, the Turkish lira stayed near a record low on Friday. So let's go and get rid of this. And we'll move into the analysis. Oh, we're starting to see a nice little rebound here in the euro. Certainly, really hasn't helped the gold, which has been on a straight down move. Um, So the euro continued its move lower to start the week. Bias chart support remains at 1717 with resistance now at 1798. So we had 1717. Now today's low so far has been 1721, so pretty close to it. And only difference is that we've moved the resistance down to 1798. But it's been a relatively tight range across the board in the majors to start out the week. Obviously, rolling to the new session for Tuesday. Let's go and move into the cable. And you can see we have not even moved. Look at yesterday's. It was dead as an absolute freaking doornail. I mean, it was crazy. Look how quiet that was. So cable began the week in a restrained range. Bias support and resistance remains the same respectively, with the support coming in at 29.54. You can see that right here. And resistance will be 31.17. Well, trying to see if we can push up a little bit higher, but we're only at 30.83. So once again, we're going to go and keep that the same, 29.54, 31.17. And you can see what a tight range we're in. And once again, it's the dog days of summer. As many of you know, a lot of European traders go on holiday during August, so we could see quiet trading for a while. Now, that being said, you do have to be a bit cautious because what happens here in the States with all this stuff going on with the coronavirus, impact with the unemployment benefits, we could see some big moves that could result. We could see some big moves in equities potentially that could result in a big move in the dollar. Moving on to the Aussie dollar. So the Aussie kept itself in a tight range on Monday. I mean, look at this range on Monday. This is just like nuts. Look how quiet that was. I mean, what looks at 71.40 to 71.80. So basically a 40 pip trading range. Therefore, bias chart support and resistance will be the same, 71 and 18 on the downside and 72.07 on the upside. So once again, we just weren't moving, folks, yesterday. Look at that. So bias chart support and resistance are going to remain the same, respectively. Moving on to the Kiwi. The Kiwi spent Monday marred in a 40 pip trading range. Look how dead that was. I mean, that was just like incredible. No changes in support or resistance. And you can see they're coming in here. 65.61 slash 32, 66 cents even. We're actually pressing up against the 66 cent a bit here. We can actually, you see this low right here? The low bar on that right there. We'll call it 66.26. Oh, wow, that's exactly what they went to. So 66.26. This will remain the same here. And let's go and move on into the dollar CAD. So it looks like the dog days of summer have overtaken FX as the CAD joined the other pairs in a restrained 50 pip trading range. Support will be 33.07 with resistance at 33.88. So that one did get changed a bit. But you can see the range that we're in yesterday, 50 pips. Oh boy, are we into August. And we're moving into the dollar peso. So the peso, like all the other dollar pairs, remained in a rigor mortis mode within a 25 pip trading range for Monday. Bias chart support and resistance levels will remain the same. So we, like I said, the rest of these other majors are just not going anywhere. Downside 22.20, you can see that here. That's going to be our support. And on the upside, 22.58. Well, we're just smack dab in the middle, doing a whole bunch of nothing. With that, we're going to move on to the dollar yen. The dollar yen pushed a bit higher on Monday, but closed below 607. Resistance looking out is going to be 647 with support at 548. So we've widened the range a bit here. So 647. We talked about this on Monday. Remember, we said that if it were to 607 was the resistance, but that if it were to, we would need to get a close above 647 to generate some further upside momentum. So 647 right here is going to be our bias chart resistance, and the downside will be 548. And you can see here. So we had the 607 that worked out nicely on Friday. Remember, that was coming into non-farm payroll. That was our bias chart resistance. Hit that to the pip, and then we pushed a little bit above it yesterday, although we kept our bias chart resistance at 607. And we said that, hey, if this thing wants to move higher, our analysis for over the weekend was that we would have to get a close above 647 to generate some upside momentum. That will be our bias chart resistance looking at. And you can see we've been able to press a little bit higher from yesterday's highs, but we're still coming in, but we're holding this 607 at the moment, or right there. We're going to move into the dollar index. So the dollar index saw follow through, culminating with a firmer close on Monday. Resistance will remain 93.91. So we have coming up there, but we haven't been able to challenge it or get above it. With support's going to be 93.17. So you can see we're trading within this zone here, 93.91, 93.17 on the downside, and those will be our bias chart and support levels respectively. So 93.91, the only difference is we're moving this up to 93.17. On to the Kiwi yen. So we had support here at 69.41 with resistance at 70.43. Same here. We haven't moved anywhere. We're just trading in a very tight range. As a matter of fact, look at Mondays. Oh my God, it was just dead as an absolute doornail. So pressing a little bit higher today, but certainly haven't gone to a point where we've challenged the resistance. So we're 70.13. Resistance is still going to remain 70.43 with our bias chart support at 69.41. Let's go on and move in now to the Euro Yen. So 25.20 is our bias chart resistance. No change there. And the bias chart support from yesterday was 24.33, and you can see that held. So actually came right to that level to the pip on both days, and we've rebounded. So these two are going to stay the same, support and resistance. And take a look with the Euro odd. Once again, trading in these quiet levels. We had 64.06. We actually came down here just about to tag this level, which comes in at 63.43. So we'll definitely be moving this lower. And on the upside, 65.09 would seem a bit rich, as we did test the downside for the stops, and resistance will be ratcheted down right here to 64.74. And once again, support level right there, 63.42. And onto the Euro Kiwi. $78.80 continues to hold this market in check right here. The only difference is on the downside, we had $76.84. We haven't taken a dip at this point. Still holding up relatively well in a very, very tight range once again. So the bias chart resistance support, once again, dog days of summer, it's going to go and still remain the same as we're going to move into the Aussie yen. And look at this. I mean, you would think we were looking at a 15-minute chart, and this is a daily chart. This is just, look at the range for today, and we're talking about, looks like about a 40, 45 pip trading range, maybe just a hair more than that. So very, very quiet trading. Resistance on the upside, we had for 76.35, and you can see that's this level right here. On the downside, 75.19, still holding up very, very well here. So 75.19 comes in right there. You see right here. We haven't even. We're just trading just dead in the water for now. We'll go and move into the guppy. And here with the guppy, we actually remember we pressed this a little bit higher for 39.29. We're trading at 38.82. We're working up a little bit firmer here. Nothing pushing those limits at this point. But there's 39.29. That's going to remain the same. On the downside, we just pushed for 37.36. It's not really getting any lower, but we're not making any moves, significant moves higher. So that we're going to move this here to 37.73 for the low, for bias chart support, but no significant changes. And then we'll move into the sterling odd. On the upside, we had 82.50 and I had these turned around because look, so it should be 83.03. And yesterday we got up to 82.85. So the 83.03 is going to remain the same, except it should be here. And on the downside, 82.50. We did make a move lower here. Let's go and take a look at the 2-hour chart. That's what they're holding, which was here. And the downside, if we were to break lower, would be right there, 82.03. That's what I meant right there instead of 83.03. There we go. It's just been very, very quiet. It's to be expected, I suppose, when we're in August. Once again, as many European traders go on holiday. Take a look at what we say here, stand here on these NASDAQ stocks. Key that we actually dipped below that 209. We're actually 208.25 right now here in Microsoft. Apple's still holding up relatively well. You can see here Facebook, we had that close on Friday, look with a bit of a, almost like a gravestone doji. And Monday we did follow through a little bit further here. We're looking at the daily chart. So really this market is open to move lower. We're still holding up relatively well in the NASDAQ futures. But you can see here on Netflix, let's take a look here. We're just below that trend line now. So we're open to potentially moving lower here. So just be cognizant of that, especially the way this whole thing with the unemployment benefits is coming along. We're certainly suspect. And I think that we will move lower as we get through the week. I was scalping, actually scalped lower, and then I actually came in a little bit early on Monday as it fell and gave up some of those gains, but came back and caught a couple of more scalps to the downside that put me back A-okay. And but you can see here these top 8 equity stocks in the NASDAQ certainly seem a bit vulnerable, with the exception of Apple, still holding it relatively well. But as I said, Microsoft dipping below the here at the 209 area here, dipping below that, and also Facebook looking a bit susceptible. And then, of course, Netflix below the trend line. We'll go and quickly move back to futures. You can see here, bear with me. Look at gold on its lows at 1994. Remember, we took a look here on the right here. 1986. That's where we have some decent support coming in. And it certainly looks like it's heading in that direction. And take a look at what the volume looks like so far. Oh, pretty good jump here on that move to 1992. Look at that. Over 3,000 contracts on this dip. Retesting those lows. Crude oil still holding relatively well, holding above 42. And NASDAQ, like I said, 11,148, caught 11,150 would be the 61% on the way back. See how they react there. And this high peak was 11,156. And that'll do it for here. And thanks for joining us here on the European Crossover webinar.